Cruz, what's happening? All right. Getting ready to get started. Julie, how are you doing this evening? Bo's here. Way to go, Bo. More likes can attract more viewers. Keep it up. Woohoo. Julie C., how are you? All right. Sergio, ¿qué pasa, amigo? ¿Cómo está? What's happening there, Sergio? All right, let's get started. It is Friday evening. Michael Sinclair, it's a myth, the legend, it's James. Woohoo! Yay for me! All righty, thanks for that, Julie. All right, so let's get started. It's Friday evening. It is 6 September 24. It is officially the last day. You ready for this? The last day of the third month of the third quarter for 24. Betty, how are you today? All right, so let's get started. We can finish up from where we left off yesterday. If you guys had any questions, Darvin Lee, how are you? If you have any questions about what happened during the week, what our positions were, stuff like that, 334 baby, why not? You're gonna have to let me know what that means because I'm totally clueless on that one. Barry, how are you doing? Corazoncito. I took a stab at it, dude. It's a big name. All right. Anyway, like I said, it's Friday. We're going to start up with where we left off last night, as usual. We left off with Abelmal. Ooh. Means heart. Well, cool beans. Grady Brooks, what's up? What's up? Not much. We're just getting started. It's Friday night. Don't you have someplace you'd rather be than here? I mean, come on. I mean, I'm 60 years old. I'm retired. Remember me? Sorry, Grady, I don't. But I'm retired. I got nothing better to do. I don't go out anymore because it's just not safe for me. Anyway, Richard Bruner, how are you today? I have found over the years I go out on Friday night, I just get myself in trouble. So I just rather stay home, watch some TV, hang out with you guys, because in the long run, it costs me less to stay home. All right, Grady, I have to admit something. Go ahead, Grady, you admit away. Some comments are going to be filtered to protect the community's experience. He's 60, looks 40, unreal. Why naughty? Thank you for that. Okay, you should see the way I act. Okay, they call me Basher because I used to... Cool beans. That's a terrible thing, Brady. You shouldn't have done that. Because stuff comes back to haunt you after a while. Okay? True. Alrighty. So, we're going to start up where we left off yesterday. The first one on our list today is going to be Abelmal. So, give me a couple of seconds. We live and we learn. Yep, Grady. I think the last time I went to a class reunion, two of the calendar girls, I'm ready to learn about stocks. Cool beans. Okay, Grady, admit something to you. My 20th class reunion, I had a couple of the princesses apologize for being such bitches in high school. I said, yeah, whatever. Take a cold shower also. Yep, I take one of those. It's invigorating. Whoo! Get your blood pumping. Alrighty. Let's get moving. WBA, Jerry. Woohoo! Let's take a look at WBA in a minute. I did already say we're going to take a look at Abelmal first. So let's take a look at Abelmal first. Also, I never bash kids into the locker. I just said that I'm pretty baked. Well, alright. Gary, good evening. Where are you from? I'm from the Boston area. Sounds good. Which do you like? SCHD? Nope. VOO? Nope. Okay, Ray. Ray, I'm going to make you a promise right here, right now. I have a couple of things to go through first before I go to anything else. But if you really want to talk about SCHD and VOO and why I do not like them and why I think you're being taken advantage of by buying those, Okay, you're actually being lied to about those two ETFs. If you want to hang out, remind me in about 10 or 15 minutes after we get warmed up. I got to go through the disclaimers. I got to go through a few things first. But if you really want to know how you're being taken advantage with SCHD and VOO, how are the charts looking, Grady? We're going to get to them as soon as we can. All right? So, Ray, I'm going to make that promise to you if you can remind me in like 15 minutes. Have covered calls ending today for U.S. Steel. Bummed that I missed out on today's gains. Larissa made this. Larissa, how are you today? All right, Ray, you may not like what you hear, okay? But then again, when you see, when you first see it, you'll say, holy shit, I can't believe I've been being lied to all these years. All right? So, we're going to get to that one. So let's go first, because I already said we'll do Able Mall first, Walgreens. Then we're going to look at VOO and SCHD. I'm laughing because I know exactly what's going to happen with SCHD and VOO. I've done them every couple of months because some people been lied to for so long, they think it's a good thing, but once they find out, then I have to question you if you don't actually. Anyway, let's go back to it. All right, first on the list, ALB, Abelmal. I actually have some Abelmal. I was not happy that it went down. VOD, please. Is that short for vodka? VOD. What the heck is VOD? Vodafone. That's what VOD is. Vodafone. Wow, I haven't traded Vodafone in years. All right. ALB. First on the list for today. Here we go. Here's our high, here's our low. This is where it was, this is where it is, and this is the direction it's going. Look at that direction. She come down a little bit, went side. Damn it. Sideways for a bit, drop down. We're sitting at 76.90 at the moment. Let's take a look at all the numbers though. First thing Monday morning will be 76.88. Isn't it strange how this is like every single day, the same thing over and over and over again? Okay, Grady, I like what you're thinking because I like it when she drops because we're going to make money when the stock drops. And then you buy low and you sell high. But you don't buy until, I'm not telling you to buy, I'm just saying I'm not going to buy until I find a bottom, it turns around and goes back up. If you look at every time it came down, look, came down, there's a little bottom, went back up. Came down, here's a little bit. Once you isolate the bottom, and now I isolate my bottoms by 2 days to the upside. So let's zoom into this for a second and see if we can actually see them. Well, that one big no, isn't it? So look, you got a bottom here, 2 days the upside, you jump in, it goes up. Okay, 2 days, 2 days to the upside. See the bottom here? Where am I? Where am I? Bottom here, 2 days the upside, you jump in, it goes up. This one right here, a little tricky, because look, here's your bottom here, here's 2 days the upside, but when you go to jump in, it drops. So that means, psych! Do you remember that years ago? Hey, do you want something? Psych! You remember that? I remember, that was back in the 80s. Very juvenile, but you know, people thought it was funny at the time. I want to get into options. Can you suggest a good book to learn about options? I'm not big on reading, you know. Once I got out of high school, I read once in a while. I don't read as much as I should. But I did read a book by Wade Cook called The Wall Street Money Machine. That like changed my view on everything. Inspired me more. How did it work out today? Because, you know, for some strange reason, I saw you typing in, but you weren't saying anything. Anyway. All right, so let's keep going. So as you can see, when she hits a 2-day bottom, you know, bottom, 2 days the upside, it's either going to be there or it's not, okay? 2 days the upside, you jump in, and then she just keeps on going, okay? But now I look at things twice a day. It used to be just once a day until I started sharing with you good people. Now I look at it twice a day, once in the morning with the trading group, and then once at night with you guys. Now, let's just get back to where we were. Able Miles on the list. Here we are the last 30 days. Okay, this is what it looks like. 30 days ago, we're here on 82, drop down to 72, shoot up to 94. That's a $22 increase. You got a $22 increase and you're going to take it or not. It ain't a profit until you take it. And nobody ever went broke taking profits. Okay? So, hits a high up here, gaps down. We're sitting here looking for a new 30-day bottom. Okay? We'll get 30-day bottoms here. All right? Waiting for this to come down. As soon as she gets to a certain point, she's going to turn around and go back up again. Well, because that's what they do. I used my school laptop. SPS decided to deactivate the mics on them for some reason. That's why I'm always type in the chat instead of unmute. Oh, well, it won't either. Hey, Lucky Larry's here. Larry, haven't seen you in a couple days. How you doing? Hope everything's good. Jerry Beard, you're scared. Jerry, what are you scared for? It's kind of exciting what's happening because we don't know what's happening from one day to the next. I find it fascinating what's happening in the economy nowadays. Because, you know, I've seen, we can all say that. Once you get to a certain age, you can say, I've seen a lot of shit. But I have seen a lot of stuff. I've seen stuff go up. I've seen stuff that makes absolutely no sense whatsoever. But it's kind of interesting to living in this time in history as we see everything unfold. So it's got to be kind of cool. Anyway, it all depends on how you look at it. Okay? All right, there's opportunities around every corner. Was on vacation, but I'm back. Cool, where'd you go? I'm kind of curious. All right, so, Able Mile. Kicks down, here's your bottom, shoots up, here's your 30-day top. Well, what happens after a 30-day top? Well, she comes in looking for a new bottom. Once we find that new bottom, now for me, I isolated it by 2 days to the upside. So as soon as she finds the bottom, goes 2 days to the upside, that's when I want to take a look about going in. And before I go in, I want to check out the numbers and see if it's going to be worth my while. So Monday, the 77s are going for 234. Is that right? That's just shy of 3%. I might do it just for this. Wait a minute, I already have Able Mile. Hold on. Okay. Okay. All right, well, I didn't get 234. I only got 49. All right. It is what it is. So I got 149, which is right around 2%. I'm okay with that. Inspire me. Pretty much all my positions are kicking my ass. Stocks are down an average of 15%. Noah Jacob, do you speak English? No, I do not. Lucky Darius, Texas Limited Fist. Oh, cool beans. Why not? He's going to Munich. Cool. And for Oktoberfest, that must be awesome. NVM. Never heard of NVM. NVM. We'll take a gander at it once we get to it. Cardinal, Ford. We looked at Ford last night. I'm kind of curious. What did it do today? Oh, we'll take a look at that. Inspire me more. All right, definitely don't get me started on politics. Ain't happening. Ain't happening, Jacob. All right, I called Ford at 10. All right, we'll take a look at Ford in a little bit. Let's just go through the motions and see what we're looking at. So, Able Mile, that was the first one. Second one we said we were going to look at before the night, before we get started, was Walgreens. You did also, I think. Well, we're going to get to that in a minute. Premium is higher because volatility spiked. Oh, hey, Fonz, I haven't heard from you in a while. Hans Kazuma. Well, you're new here. Can you look at American Airlines? All right, Noah, we're going to take a look at American Airlines, AAL, in a little bit. Let's keep on going. What do you also? Oh, yeah. Okay. Gotcha. So, Able Mile. Now let's take a look at Walgreens, see if Walgreens went up again. Now, today, we were looking, or we were hoping, I haven't even looked at it yet, so I really honestly don't know. Last night, we were looking, saying, can today be the second up day for Walgreens? I'm learning. Way to go. Now, Wednesday was a 30-day bottom. Thursday was a little bit higher. I haven't clicked it yet. Let's see. Nice. Check it out. 30-day bottom. Today is an up day. Nice. Okay, so yesterday was an update and today was an update. I'm not quite sure how you want to categorize yesterday because yesterday has a new 30-day bottom, but it also closed higher than the previous day. So the closing was higher than the previous day, and today is higher than yesterday. So that's 2 days to the upside if you want to look at it that way. I don't know. But I like the fact that it's going to the upside 2 days in a row. That's kind of nice. All right, so Walgreens, I'm not quite sure what you wanted to look at other than the fact that it's up 2 days in a row. Cool beans. So now let's take a look at SCHD and VOO. Just before we even get started, most of you already know what I think about it. I'm going to write it down so I don't forget. SCHD and VOO. Yeah, let's hear it. All right, Ray, you might not like it. Let's go. SCHD. Try it again. SCHD. There we go. Number one. It's a monthly optional stock. I do not like monthly optional stocks because you can only do 12% on port today. Holland. How are you doing there, Bobby? All right, so let me get back to this. Monthly optional stock. Now, I like weekly optional stocks. Weekly optional stocks allows me to do a covered call 52 times a year. And if I'm earning an average of 1% per week for each covered call that I do, that comes to over 52% per year. Simple interest. If you want to compound it, it's around 62.5% per year. Compound it. So, I don't like monthlies because the numbers just never work out. Okay, Coco. No, I don't do NVIDIA, Coco. Sorry. So, let's get back to this. I don't like monthlies. So, VOO and SCHD are both monthlies. That's why I don't like them. That's one reason. Theta eats. Why not eat? Okay. Yeah, Ray needs to open his ears. Why not? You've heard this one before. Noah, when you explain American Airlines, can you explain why it has gone down so much over the... no. Coco, is this an option channel? Yes, it is, Coco. Sit tight, strap on, and let's get ready to rumble. Okay, anyway, get a little carried away. Sorry, it's Friday, and I had one of those energy drinks earlier today, and I'm like bouncing off the walls. Can you shoot my boy Gabe a horn? He's on the stream. Woohoo! I have no idea who your boy is. Whoever... okay. Anyway, let's go besides that. All right? How do you compound it weekly? I'm new to trading. Hey, Fairly 2X, you're new here. Cool beans. Just sit tight. You'll understand a little bit more, answer some questions. Why can't you explain that? All right, Noah. Actually, hold on a second. I got to find out what he wrote. All right. When you explain American Airlines, can you explain why it has gone down so much over the years? And when would it be advisable to sell? I bought it for $16 a share in reference. Well, here's the thing, Noah. The reason why I can't explain why it did what it did, I have no clue because it's not that high on my list of companies to look at. When I look at a company, I look at it once every 90 days. And if American Airlines had increased its dividends for 20 consecutive years, it would be on my personal list. But considering it doesn't, it's not on my list. Coco, okay, great, thanks. I passed my 7 2 months ago, and options were my favorite. Woohoo! I love options. But let's keep going. Now, just to be honest with you, Coco, I'm only teaching one option strategy and only one. Sorry, I like to make it simple and predictable. All right, let's keep going. Oh, okay, thanks. You got it. Alcoa is down because people are broke. All right, Punisher, we weren't talking about Alcoa. He was talking about American Airlines. Because people are broke and not traveling, the gas ticket up. Okay, now, are you able to still tell me when to sell? I can't tell you what to do. I don't tell anyone what to do. What I can do and what I also do, what I will do, is I will go through the charts. I will go through the numbers on the options. Okay, I will tell you what a rate of return, Coco, makes sense. Great job. Okay, like that and stuff. Okay, cool beans. We'll just hang out, see what you can learn. If you have any questions, let me know. Let me finish up with this. I forget where I was going. Let me get back to SCHD and VOO. Okay, Punisher, Alcoa, and American Airlines, two different topics. Everyone's responding on their own. Yeah, I know. All right, I'm going to stop. Ray, I'm stopping all the questions, okay? And we're going to just deal with these two, and I'll show you why I don't like either one and why I think you are being lied to, okay? Now, you're relatively new here, so you may not know what I do, okay? I invest for a safe, predictable, and consistent, or should I say a simple, safe, consistent, and predictable 1% per week. Now, 1% per week, simple interest is 52% per year. Compounded, it's over 62% per year. Okay? Now, I enjoy trading 10 to 15 minutes a day. Now, in January, I decided to invite you people along for the ride. Great, a lot of people like it. Wonderful. But I still do it. All right, so 10 to 15 minutes a day, I do my own personal trading. Now, I like 1% per week. It's over 50% per year. It enables me to have a nice, quiet, comfortable life. I'm 60. I just retired about 9 months ago. It hasn't even been a year yet, and I'm still getting used to it, and I'm finding it to be fun. All right, anyway, so let's get back to these numbers. Number one, it's a monthly. Now, monthly options you can only do once per month, and if I'm averaging 1% per month, I'm only getting 12% for the year doing monthly optionable stocks. Now, we haven't even talked about the dividend yet, but hold on. Let's just put in VOO real quick so you know exactly what we're looking at. Oh, VOO, it does have weeklies. All right, let's go back to SCHD. All right, we're going to go to VOO after. But SCHD is a no because it's a monthly, but it gets worse than that. Congrats on retirements. Thanks, Noah. So let's take a look at Yahoo Finance. And we're going to put SCHD. Okay? Now, SCHD, the very first thing we want to take a look at is the dividends and how consistent are they with their increasing dividends. Okay? Now, how far back does SCHD go? Well, SCHD only goes back to 2011. You can't really count 2011 because they only paid one dividend, and that was in December. Okay? So from 2012, it was 14 cents, and it went to 21. Then it went to 26, and it dropped. I don't like it when companies drop their dividends because a dividend is a portion of the profits that goes back to the investors. That's you and me. Now, if my investment is paying me a nice dividend or a nice rate of return, and then all of a sudden they cut that, well, that makes me unhappy because it's no longer predictable. It's unpredictable. That doesn't work for me. Okay, when you're retired, you may not be there yet, but a lot of us, when we're retired, we have to live on a budget because we don't go back to work. Our money has to work for us. So if my dividend is going up, then all of a sudden it's going down. Well, that's not going to make me happy camper, but let's keep on going. 26 to 20, 23 to 25, 27 to 25 down, 25 to 28, 27, 31, 27, 30, 32, 24, 40, 33, 33, 34, 35, 26, 41, 37. It's up and down, up and down, up and down. All right? So that's just part of it, okay? Not 20 years. I like 20 years of increased dividends. That reassures me that the company is consistently profitable, that the powers that be, the CEO and all those people that make everything run smoothly, they're doing their jobs right, making more and more money every year. That's the reason to be in business. Nobody wants to be in business, make the exact same amount of money every single year, because I don't think there's ever a year that where prices went down. I don't ever remember hearing prices went down. Oh, wait a minute, gas was $4, now it's $2. No, it doesn't work that way. Okay, everything usually goes up. Okay, so if everything's going up, I want a higher rate of return. So when they decrease, that doesn't, all right, anyway, that's only part of it. Let's go to the summary. Okay, so here we go. Now, When you invest your money, you get a rate of return. Me, I like 1% per week. That's over 50% per year. But if you put your money into SCHD, what are you getting? You're getting 3.35% per year. 3.35 per year. Okay, I'm showing you how to get 50% per year simply and safely and predictably, all that kind of nice, neat, fun stuff. All right? But you're choosing to go into a company that's paying 3.3 and they don't consistently increase their dividends. It means, what are they doing? Breaking even every year? Okay, so if you don't increase your dividends, which is the portion of the profits that goes back to us, me, okay, and I want my company that I put my money into to consistently increase. Okay, now let's take a look at the Dividend Kings. They've increased their dividends every single year for 5 decades. This company hasn't even had 15 years of dividends, not increasing dividends, just dividends. But they go down, they go up, they go down, they go up. Sorry, there's over 300 companies that are consistent with the increases on dividends. Why would I personally put my money into this? Especially when it's only returning 3.35%. Yeah, no thanks. Now let's take a look at VOO. Now, VOO, it does have weekly options. Okay. See, it does have weekly options. Okay. Show me the Turbo Man doll. I don't have a Turbo Man doll. What the hell make you... All right, anyway. Number one, it's up to $500 a share. $500 a share. It means a lot of people can't invest in it because it's out of range for most people. All right, let's look at the numbers. 496. So the 495s are going for 450 to 750. Okay, so you get your 1% there. Great. Now, let's find out what VOO actually pays. VOO. So, Ray, this is where you want to put your money. Are you seeing this? 1.28% per year. Okay, so if you put in $100,000, you're going to get, what is that, 128 bucks? Is that right? No. 1,100 bucks for the year? Yeah, 11, that's 12. No, so every 100,000 you put in, you get 1,200 bucks. 100,000, 1,200 bucks. That sucks. If I put 100,000 in, I'm getting 50 grand. Now, ask yourself a question. Would you rather have 50 grand or would you rather have $1,280? Okay? You think VOO is good? Well, this is what they're paying right there. Let's take a look at the dividends and see how consistent they are with the increase in the dividends and how long have they been. They've actually been paying a long time because they've been around for a while. Well, not really. 14 years. 14 years. All right? 56, 53. Not off to a good start. 54, 57, 58, 69, 57. Nope, not good. 64, 69, 94, 67. Backwards again. So it goes up, it goes down. Up, it goes down. Got 109, 101, 95, 88, 130. 118, 108, 116, 121, 130, 118, 143, 143, 126. All over the place. Okay, but no. Sorry, dude. Okay, you're taking your good, hard-earned money and you're trying to make it into something so maybe you can buy a house and the kids' college, be there for the grandchildren. I really don't know what your goal is. Really don't. For me, it's to have a nice, comfortable retirement. So I need a consistent, predictable, and safe return. Now, I don't have enough money to be able to live off of annual returns. I don't even have enough money so I can live off of monthly returns. Sorry, the amount of money I have to live off of weekly returns. 1% per week allows me to be very comfortable. When will you do ALA? Okay. Now, Noah, don't take this the wrong way, okay? You're new here, Okay, you asked me about American Airlines. I said, okay. I put it on the list. Unfortunately, you just got here. All these other requests came before you. So I probably won't get to American Airlines in looks like Sunday because you guys keep hitting me with all these questions and I can only go so fast when you guys hit all questions. Now I get 23 questions I haven't even looked at yet. So VOO, no thank you. I prefer a safe, predictable, consistent 1% per week because I ain't rich. I have enough to make myself comfortable. That's it, and I need that 1%. Ray, you're right, everyone is responsible. Okay, so anyway, yeah, no to both of those, dude. Sorry. All right, let's get back to where we were. How do you, oh buddy. Okay. Are you going to enter the Mara dip, giving 4.8% on the calls? You were there this afternoon when we were looking at things. I actually have Marathon. Okay, I have Marathon at 19.25. I sold the 14s, got 43. That's 2% for next week. That's in that account. This other account, Marathon was 18. I sold the 14s for 29. Got like 1.5%. So I didn't get that one. So let's put that one on the list. We'll take a look at Marathon. Yeah, I'll put it on the list. M-A-R-A. All right, so let's keep progressing. Progressing forward. I sold the call close to the money. What did Larry say? I sold the call close to the money. When do you know when or if the shares will be redeemed? Tomorrow afternoon, because the options actually expire tomorrow afternoon. All right, Punisher. Alcoa is down because people are broke and no one is traveling. Alcoa has nothing to do with with people traveling. Okay, you mean AAL. Okay, AA is Alcoa. Okay, AAL is American Airlines. Can you explain options again? Hellraiser, raising hell, cool beans. All right, Hellraiser, an option is nothing more than a contract between you, yeah, between you and whoever is selling it. Well, usually it's the market maker. Okay, now there's two different options. There's a call option and there is a put option. I do not do put options here. I like to keep things simple and easy. All right. Put options have a tendency to be a little bit more complex, but a call option, and the reason I only do call options because it allows you to everyone to get qualified. That's the word I was looking for. Okay, because there's a little bit more risks with put options than there are with call options, but they both kind of work the same way. What you're doing is you're entering a contract with someone else, a stock seller, because if I buy the stocks and sell it to you using a covered call. A covered call is a contract that, all right, let's find one second, see if I can explain it with, okay, here, we'll use this one. Okay, VOO, it's currently at 496. If I buy the stock at 496, I gotta buy 100 shares, okay? I have to buy 100 shares to equal one contract. Now, I have a couple of different options. It's kind of weird talking about options and we have different options. Okay. Let's get rid of this. Okay. Okay, the calls are on this side, the puts are on this side. Or you can have them vice versa, however you want, because some of the trading platforms allow you to put them on other sides. But anyway, the call option allows me as a call option seller, covered call seller. Okay, if I buy the stock at 495, I can sell it for the exact same amount. These are called strike prices. Okay, so if I buy the stock, okay, first of all, I have to buy the stock to do a covered call. Buy the stock first, 495. And if I sell somebody the rights, not the obligation, that means if I sell it to you, you can buy it from me anytime from the time you pay for it, and then I receive the money. So it's a transaction. You pay for it, I receive the money, and from the time I receive the money, which is also called consideration, because you need 4 items in any contract to make it legal. Okay, beginning date and ending date, price, terms, price terms, and then a meeting of the minds. That means we're both understanding the same thing. Okay, I buy the stock $4.95. I sell it to you $4.95. For that privilege, you are going to pay $4.50 a share. As a seller, I'm going to receive $4.50 a share. That is my premium. So if I buy it $4.95, I sell somebody the rights to buy it from me for almost the exact same price I just paid for it. $4.95.47. I sell it for $4.95, and then I collect the premium. That is the consideration for the contract. The money has to change hands for a contract to be legal, or something binding, equal value, something like that. They have some weird things to make it. Handshake could be consideration. So someone's word of honor could be consideration. I can go fishing in a lake and get a big bass. That could be considered consideration. It's weird when it comes to contracts. But when it comes to stock option contracts, it's actually money. So you have to put up money. So if I buy it, $4.95, I sell the covered call at $4.95. I collect $4.50, which is a little bit less than 1%, and I get to keep that regardless what happens to the stock. How do you hedge if your stock goes down? Very closely there, Fonz. You should tune in and see how it actually works. You are explaining your system. Yep, already did that. You get distracted so easily. Yes, I do. I have no qualms whatsoever in telling people I got adult ADD. Got that, what do they call it, squirrel? I got that thing going on. Ray, 1% a week is a great target. Ray, it is simple, it is safe, it is predictable, it is consistent, and it takes me less than 10 or 15 minutes every single day, except for Saturdays and Sundays. Okay, so for 10 or 15 minutes every single day, I get 1% off my account. And 1% off my account makes me very comfortable. Okay, wait, if you buy a stock before the EX date and sell it after the EX date, but before the payout date. No, but close. Do you still keep the dividend? As long as you own the stock before the EX date, and you own the stock on the date of record. There's 4 dates to remember. Date number 1 is the announcement date. Let's actually look at some. Here we go. Very first date is the announcement date. The second date is the EX dividend date. The EX dividend date is the last day the stock trades before the dividend is paid out. So if you want to collect the dividend on any stock, you have to buy it before the EX date. And you can even buy it 1 day before. So if Comcast is on the 2nd of October, if I wanted to collect that dividend, well, I'd have to buy it on the 1st, the 30th, the 10th, the 3rd, the 5th, the 19th, any day before the EX date. Okay. The third date, date of record. Well, it kind of sounds like the date of record is whoever owns it, it gets recorded and that person is entitled to the dividend. Date of record. So it's recorded who owns it on the date of record. So you have to buy it before the EX date and hold it past the date of record. The 4th date is the payment date. That is simple. Payment date is simple. That's when you're actually getting your check. How do you join the morning trading group? Hey, Chrising Emmy? Or Chris Ingham? Some of these names are out there. All right. Does D-nut work? I have no idea what D-nut means. Inspire me more. Interesting. Do you still keep the dividend? Okay, so as I was saying, if you want to collect the dividend, you got to buy it before this date. Okay? If you sell it after the dividend date, the stock has a tendency to go down. So when I do it, what I'm looking to do Alice, how are you today over in the Facebook world? Woohoo! Okay, I like to buy it 2 weeks before the EX date. So here's Comcast right here on the 2nd of October. If I want to get this dividend, all right, I want to go 2 weeks before because I want to give the stock room to move. Because most stocks, or most good quality dividend stocks, have a tendency to go up in value before the EX date. So if I like Comcast, I like 2 weeks. I like 2 weeks before the EX date. So if the EX date is here, 2 weeks before is here, and I like to do it on a Monday, because on Monday I get the highest rate of return when I do a covered call, especially a weekly. Because if I'm buying first thing Monday morning and I'm selling the option first thing Monday morning, well, I have all day Monday, all day Tuesday, all day Wednesday, all day Thursday, and all day Friday. Okay? For the 5 days, I get a higher rate of return. That's why I like weeklies. Because I grew up in the 60s and 70s and 80s. Okay? We went to work at 8 o'clock Monday morning. 5 o'clock Friday afternoon, well, we'd like to get paid. It just so happens that the stock market opens up at 9:30 Monday morning. But I go online at 9 a.m. Okay, for the morning trading group. Are you drinking pee? No, actually, this is lemon honey for my sore throat from talking to you people so much. I'm not used to talking so much. So almost 3 hours a day for, I don't even know what day we're in. All right, so anyway, what was I saying? See, I get distracted so easily. All right. However, the stock price usually adjusts downward after the dividend date. Who's older? You are. You suck. Don't even put me in the name with that turd. All right, Chrissy, how do you join the morning trading group? Let me get out of here, move this way, get this back this way. Then we go over to here, and then we go over to there. Got to go to the 10-minute trader. That's my website. All right. The 10-minute trader. That's my website. Anytime you hear me introduce myself, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader, where I invest, blah, blah. Can you teach me something? Yes, I can. Just hang out, chill, ask questions, and I'll get to them as we go along. All right. So if you want to trade along the morning trading group, right there, okay, live trading online, and that brings you to my Patreon, which is Dividend Stock Talk. Yay! The crowd goes wild. All right, let's get back onto the stock. Okay, do they grow by 10% or so you price wise though? Shouldn't we count that? Okay, see, Ray, hold that thought. You know, that's an interesting way of looking at it. I tell you what. DM me with your phone number. I will call you back. Then you can think whether or not I am. It's up to you though. Okay, that works. Do some research. Okay, do some research on Dividend Stock Talk. Also do some research on the 10-minute trader. You'll see pictures of me going all the way back to 2012. So let's get back onto this question. Ray, from the question I'm seeing here, I can deduce 2 or 3 different things. Okay, right? Just sit and chill. You'll learn stuff. What happened to Bristol Myers Squibb? We're going to get to that. Why not? Just give me a second. I'm chatting with Mr. Ray here for a second. They do grow by 10% or so. Your price-wise, though, shouldn't we count that? Now, by the conversation that you're having, from what I can read, because I know that TikTok doesn't give you a lot of space to write stuff. It looks like you're looking for something with capital appreciation. So you buy your stock and it goes up. Well, that's what you think is happening with VOO and SCHD because they throw that monthly dividend at you. Okay, great. It's nice to get a monthly dividend, but you add up those dividends and then you figure out what you are getting at the end of the year as opposed to what you get in it. Okay, one of them is 3-point-something%. The other one is 1 point whatever. Crappy. But if you're looking for a gain on an annual basis with the stocks, you're in the wrong place, dude. Seriously. I honestly could care less if the stocks go up, because stocks don't go up. Stocks go up, they go down. They go up, they go down. They go up, they go down. They go up, they go down, so on and so forth. That's all they do. What I try to do here is take advantage of when it comes down. See, it hit the high right here. It came back down. It went back up. Now it's coming back down again. That's exactly what they do. I don't want to buy and then wait for it to go up. No, I want weekly cash flow. I want 1%. It makes it easier for me. 1% is 50% per year. So if you're looking for a 10% growth, you're definitely in the wrong place. I'm not looking for growth at all. I'm looking for cash flow. Now, I have to admit, now if I make a 1% per week, I don't take that whole 1% out. I do leave some in there for it to grow a little. So it does grow a little, but very little. Okay, so if I have $100,000 in my account, 1% a week is $1,000. So if I only use 900 and use the other 100 to let it grow, it only grows by $100 a week. Okay, fine. I can deal with it, but it's also paying my bills, and it's getting higher and higher. All right, Hellraiser. Can you just do good stocks? Forget these examples. Okay, I'm not 100% sure, but I got a kind of idea where you're going. Is DG going to drop any more? That's a question I don't know. So anyway, Ray, I hope I answered that for you. Okay, I'm really not looking for capital appreciation. I can honestly care less if the stock goes up or not. But what I don't want to do is a couple of things. I don't want to buy at a high, all right? I don't want to buy at a low, but a low does tell me when to look. Because at a low, you're going to, in a couple of days to the upside, and that isolates the bottom. Okay, right now, we have no idea where this bottom is going to be. It's going to keep coming down until it stops. Once it stops, it's going to turn around and start to go back up. That's when I want to get in. And I want to get into a good quality company that I know of. VOO, oh hell no, not me. All right, DG. I need $500,000 in return. Old white guy. Okay. Old white guy, I need $500,000 a year in return. You have definitely a spending issue there, dude. If you need 500 grand a year to pay your bills, you definitely got to do something else, man. Move to Florida, get yourself a trailer. You can live in a trailer for what? A couple of $1,000s a year. All right. But anyway, no. If you need 500 grand a year, you're going to at least need to have at least $1 million. Well, old white guy, you got a long way to go. DM4 might be consolidating. You're not reading the comments. Yeah, they take a while, okay? I have a lot of comments, and I have 6 channels to go on, so you're not the only one. Okay. They don't pay shit. Who are we talking about? Yeah, DG. Well, let's take a look at DG. Dollar General. Nice drop. Gotta love it. Here's your high, here's your low, here's where it was, here's where it is. This is the direction it's going. Right now, we're sitting at 82.58. It looks like it found its bottom. Awesome. Oh, I forget. I got some cough drops yesterday. Here they are. See if they work today. All right. QQQ. Oh my goodness. Someone else is new here that thinks QQQ is good. All right. Let's finish up with DG before we go to what the crap Q is. Just my opinion though. But once you see the numbers, you'll think it's crap too. All right. Let's go. High, low, was, is. Here, I want to take a look at this. But before we do that, let's take a look at these numbers, see if it's even worthwhile taking a look at. So Monday morning, 82.80. So we're looking at the 83s. The 83s, 150. Gotta love it. I love 150 on an $80 stock. That's close to 2%. Not quite, but close. Last 30 days. Okay, 30 days ago, here we are. 124. She dips a little bit, shoots on up to 126, comes over, drops from 125 all the way down to 85. It's 15.25. That's a $40 drop. That's a big ass drop. On $120 stock, that's a 30% drop right here, from here to here. Okay, well we're at 82.58. Now, I love this because I like the dollar store. Okay, Dollar General, sorry, Dollar General. Nice big drop. Here's our bottom. Now we're going to make most of our money buying low and selling high. So the question is, do you like the dollar store? Sorry, Dollar General. They are two different companies, sorry. Dollar General, 82.80. It's like 83 bucks. Okay, but right now the 83 is going for $1.50. That's close to 2% for 1 week. So here's your bottom here. And you've been hearing this almost all your adult life. You buy low, you sell high. Well, she was here, now she's down here. What do you think? Do you think Dollar General is going to go away? No, I don't think so. They've been around for over 100 years. All right. So, let's take a look. What is that? Mirav? I can't. It's Sunday on Friday. All right, why naughty? I have no idea what you're talking about. All right, somebody wants to take a look at the Qs. I don't like the Qs. A couple of reasons. Okay? A couple of reasons why I don't like the Qs. One, it's over 400 bucks. I don't like stocks over $400. Let's go and take a look at the Qs. What kind of dividends the Qs pay. Okay? So, let's take a look. Now, Qs, they pay quite a while. Okay? 2010. They've been paying for 14 years. Think about it. 14 years. Now, I like 20 years, 2 decades, 20 years of increased dividends. That's what I like, 20 years. This thing only has 14. So no, for me. Let's take a look at the numbers. 11 cents to 8. Well, that's going backwards. 8 to 12. Well, that's good. 12 to 10. That's going backwards again. 10 to 16. 16 to 5. Come on. 5 to 11. 11 to 14. 14 to 20. 20 to 37. 37 to 16. That's almost cutting it in half. Oh, wait, that is cutting it in half. More than half. Up, down, up, down, up, down. All in the same area. Under 40 cents. Well, here's that 40. Now it's at 50. Now it's at 40. Okay, now it's at 60. Now it's at 40. Now it's at 50, 54, 81, 22. What the hell? That's all over the place. No, 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 and no. But wait a minute. Johnny, tell him what he's won. As a consolation prize, let's take a look at the rate of return the Qs are offering. You ready for this? Seriously, are you ready for this? 0.61. Just that was lovely. 0.61, that's a little bit over 0.5%. You're putting your money, $460 per share, to get a little over 0.5% for the year? Are you shitting me? Seriously, what the hell are you thinking? Okay, seriously, if you're putting your money somewhere, do some due diligence, do some research. What are you getting in return? So you're putting your money up and you're getting a little over 0.5% for a year. Now, I understand a lot of people don't think you can get something over 20% or something over 25 or 30%. Most people don't think that, never hear of it. Why? I want to be filthy rich. Woohoo! No, I don't. I am back. Did you miss me? Ken's. No, I did not miss you at all. I'm terribly sorry. No, I don't even feel bad about it. Sorry, dude. About 10 or 15,000 people come through every single night. All right, so every once in a while, I don't really recognize it. What are your thoughts on DG? What are my thoughts on Dollar General? Didn't we just go over that a minute ago? Okay, so anyway, I don't like the Qs. I don't. Because you're putting your money into a computer and the computer's giving you crap. All right? All right, let's keep looking at my thoughts on biotech has issues. Sure it does. Drazik finally joined the AM group. Hope I will be able to keep up. I use Qs for custodial Roth IRA. That's all it's worth for. Dude, you really got to get out of there, man. If you're going to have a custodial Roth IRA, at least do whoever you're trading for, do them a favor and get out of this piece of crap. That pays 0.6, just a bit, a half, above half. VOO pays better, okay? There's a lot of other ETFs that pay better than this piece of crap. Seriously. Are you a trader, Vincent? Yes, I am. Inspire me more. I was here yesterday. All right, Ken's, I didn't see you yesterday. All right. What do you think of dividend capturing on Coney? Somehow giving $1 a month as an $11 stock. Well, let's quickly take a look at Coney. C-O-N-Y, because this is another one that I do not like. Okay? Now, inspire me more. You know, you've been here for a while. You're actually on the morning trading group, and I don't know how to get this through to you. I seriously don't. But you're not reading all the numbers you need to read. They may be offering 129% rate of return for the year, but look at where they are. Profit and loss year to date, negative 11.98%. So they're down for the year, yet why are they giving you this? Well, let's find out why. Let's go over to historical data, look up the dividends, and look at all the dividends that they're offering. Okay? Now, well, would you look at that? Coney has been in business for how long? Not even a year. So yeah, of course they can give out outrageous rates of return because they're not even a year old yet. It went from 120, 121 to 108, 246, 269, 108, 166, 279, 228, 170, 157, and 101. It's all over the place, but it's only 1 year. You can invest your money any way you want. Seriously, you can. Me, personally, I like simple, safe, predictable, and consistent. I like safe companies. There's no safety in this whatsoever, in my humble opinion, because they only been... Michael Vincent, do you think this is a good idea? Put it into Coney? No, I don't think it's a good idea putting it into Coney. Coney has 1 year, not even 1 year under its belt. Coca-Cola has been around for 140 years. Walgreens has been around for 170 years. Consolidated Edison has been around for over 200 years. And you're putting your money into something that's not even a year old yet. All right, let me keep going. What are my thoughts on DG? We already did that. Biotech issues, not worried about it. DG going below 77? Don't know. We already looked at it. Don't do singles. Why not? I'm going to disagree with you. I'm a put seller. Fonz, way to go. Covered needs to have it. Covered needs to have. I have no idea what you're talking about. I moved to Europe for a reason. I'm sure you did. What is the purpose? The why do people do that? What's the benefit? Okay, Hellraiser. I'm reading 2 or 3 different messages here. What's the purpose? What's the purpose of what? Okay. Great thinkers have been asking that question since time began. What is the purpose? In the grand scheme of things, there's no purpose whatsoever. In a couple of million years, nobody will even know we even existed. There's a lot of ways you can look at it. Does the premium get deposited into your account? Laurie, you're absolutely right. It does. As a matter of fact, when I do an option, okay, when I do a trade, okay, let's look at Macy's for a second. You ready for this? Macy's is currently at $14.69. The closest one's going to be the $14.50 or the $15 for next week. And both of them are giving roughly around 1%. Okay, fine. Here's the thing. If I buy it first thing Monday morning, when I say first thing, the market opens at 9:30. So I'm looking at buying it at 9:30 or 9:31, 9:32. As soon as I buy it, I sell a covered call along with it. So I'm doing 2 trades at the same time. It's called a a covered call. What's it called? Hold on a second. Covered stock. Okay, totally different. Currently, it's at 14.69. If I do the 15s right there, that's what I'm looking at. I click on the 15 right there, and here's the trade. Okay, I'm buying 1,000 shares of Macy's. Okay, at that price. I am selling 10 contracts at 15. The call strike. See the call option for the 13th of September, which is next Friday. I like doing Monday to Friday, 1 week at a time, every single week. Okay, so it's costing me this. So let's see exactly what the numbers look like. If I hit confirm and send, oh, here's the order. Are you ready? This is what the order sounds like. Buy 10 covered calls on Macy's, 100s, those are the weeklies. 13 September 24, that's next Friday. That means at 4 o'clock Friday afternoon, next Friday, that option is going to either be worth something or worth nothing. That's just the way it is. It's either going to go up or it's going to go down. And it's exactly that simple. Up or down. It's a 50-50, up or down. There is no sideways. There is no, oh, what if this, or I wasn't feeling right, or I need my, no, none of that bullshit. It's either up or it's down. Okay? It's only two genders, and it's either up or it's down. It's black or it's white. It's right or it's left. It's wet or it's dry. Let's not go over common sense, please. All right? Common sense is common sense. So, buy 10 covered calls, Macy's. Those are the weeklies, 13 September, the $15 call against Macy's. That's the price. Here is my break-even point, $14.49. Well, the stock is currently at $14.69 and going in an upward trend. Remember, we look for the 30-day bottom or a bottom and 2 days to the upside. That's why I like to buy, as it's moving up. So, my profit is $510. So let's figure out what rate of return I would be getting for this particular trade. Now, to figure out the rate of return, get out your trusty calculator and you put the profit. What's the profit? $510. So $510. And how much am I investing? I divide it by how much am I investing into this one trade? 14,496. 14,496, and I hit equal sign, and that will give me my rate of return. My rate of return on this particular trade that I'm showing you right here is 3.5%. Well, hell, I like 3.5% for 1 week, because here's the thing. I'm not going to make 1% on every single trade. Some trades will be 1%, some trades will be less, some trades will be over 2 or 3%. Well, this one right here, 3.5%. I like that number. All right. That's just an example. And yes, I already do have some Macy's. Let's go back to where we were. All right. More questions. I have ad. I have, oh, you have ADD. I have ad. I have ADD. Excuse how the 450 is less than 1%. All right, Darbenly, I'm going to apologize. I think you're talking about, is that the Qs? I don't know. Oh, 13 September, there it is. 450. All right, I have no idea, Darbenly, I have no idea which one you're talking about. Feel better today, James? Glad for you. Yay for me. So, person buying your call knows they purchased a call. Yeah, Charlo, anytime you buy or sell, okay, there's a different mentality to option buyers as there is for option sellers. Now, I am an option seller. I buy a stock and I sell options against it. Some people, somewhere in the world, says, ooh, I like this. I want to buy this because I think it's going to go up. That's what the buyers do. Buyers think it's going to go up. Feeling better today? Yep. Charlo, does one know they are purchasing a call? Yeah. Sincerely. Hey, I haven't heard a seed from you in a while. Nice to see you, sincerely. Following you, when do I get to start paid. Menji, I have no idea what that means. You following you, that's kind of strange. When do I get start paid? I have no idea what that means. Scooter, sir, I always appreciate the financial advice you get. Scooter, dude, I have no idea how many times I have to tell you that. Seriously. Let's go back. All right. Scooter, I always appreciate the financial advice you give me as I make you my... Okay. Scooter, again, I'm asking you again for the fourth or fifth time. I'm not an advisor. I do not give advice. I look at the numbers. I give you my opinion. Huge difference between advice and opinion. Okay? And I'm not a financial advisor. Ray, yeah, do you trade live? Would be interesting to see you make the trade in real time. Well, Ray, I actually do have a live trading group. It's $100 a month. If you want to join, fine, join. $100 a month. You get to watch me trade. Live Zoom call as I trade. After I am done trading, you can ask me any questions you want. I'll stay on for hours and answer your questions. That's for $100 a month. That's 22 days for 2 hours, about an hour a day. 22 hours. Fine. Wow, I'm underselling myself. Shit. Okay. Thoughts on S? What the heck is S? Now, if I say what the heck is something, it's usually going to be a no. All right. S. Centerflow Incorporated. 22. Nice. Let's see what the premiums look like. Just because the numbers look good and the chart's okay, well, I want to know what's happening, people. Hey, random New York City. All right. So Chase, 44.99.9. There are no dividends this time section. So when I say what the heck is S, that usually means it's going to be a no because I've never heard of it. The reason why I've never heard of S is because it doesn't fit into my equation. Your round peg does not fit into my square hole, or my square hole, whatever. It just doesn't fit, dude. Sorry. Kush pays the bill. All right, everybody. I'm gonna send you guys Kush's email address. We're all gonna send him our bills because he pays the bills. How are we doing? What are we looking at today? Well, right now we were just looking at something that ain't on the list. So let's keep on going. Dollar store. Stay away. Walmart is crushing them. William, you said that yesterday. All right. CXQ. Can you explain why people are telling me I should not invest in dividend stocks? Yep. I can tell you exactly why people are telling you that. Because they don't know and they don't understand. Something you don't understand, you tell people to stay away from it because you think you're doing them a favor. Okay? Now, I'm not saying dividend stocks is the way to go. There are lots of ways to invest. Literally thousands of ways to invest. You can do anything you want to invest your money. You can invest your money anywhere. You just so happen to land here where I'm telling you what I do. Okay, now I'm 60 years old. I'm retired. I have seen a lot of shit over the past, let's call it moment of enlightenment. My moment of enlightenment came when I was 23. All right, I just got out of the service. My girlfriend had just broken up with me. Me and my buddy rented a house a couple of towns away from home because we wanted to get away from home. A couple of towns over. I had a 40-hour-a-week job, okay, and I thought life was wonderful. I'd go to work. I paid all my bills. I'd come home at the end of the week. I had a little bit of money, just a little bit, to do something. Okay? So we either got some steaks, barbecued out back, going out for some beers or something like that. And it was just nice going to work, coming home. The American dream. My moment of enlightenment was my dad called me and said, James, you got to check out this infomercial on buying real estate, no money down. That was opening Pandora's box, and lo and behold, here we are. All right? My moment of enlightenment is when Brian Tracy said, have you ever wondered why some people seem to have better lives? They drive nicer cars, they live in nice homes, they drive fancy clothes, they take nice vacations. Their life just seems better. And yeah, growing up poor in the 60s and 70s, we were on welfare. Okay? We got government assistance. People would come to my house on Thanksgiving with a big bag of food because my mother was by herself raising 5 kids in the 60s and 70s. Okay? So I know what it's like to be at that end. And yeah, this was a moment of enlightenment. Have you ever wondered? That's a powerful words. Have you ever wondered why some people seem to have better lives? Colton, how are you? Yes, I remember you. You were here a couple of days ago. All right, so let's keep on going. Okay, Royer, Big Lots. I don't know what the ticker symbol is for that. CXQ. I hope that answers your question. People are usually afraid of what they don't understand. Okay? Now, what I'm going to suggest to you is give it a fair opportunity. Take a listen to what I have to say, see if it makes sense, and then go listen to other people, hear what they have to say, see if that makes sense, and then go look at something totally different, a totally different way of investing your money. Find something that makes sense to you, that you're okay with. Because if you don't understand it, and it doesn't make sense, well then don't do it. What I tell people here, and I encourage people, number one, do a paper trading account. Try it, see if it works. It's like Monopoly. Okay, you're gonna waste a few hours if you don't like it. But if you like it and you understand it, think about it. 50% a year. You can double your money every 2 years. Well, it's like 18 months. 16, yes, about 16 to 18 months. You can double your money every 16 to 18 months. How fast would that get you to your goal? And do you even know what your goal is? A lot of people don't know. Okay? Most adults spend more money and more time planning a family barbecue than they do with their personal finances. So just because someone tells you dividend stocks don't work and don't invest in them, how do you know if they're being honestly true to you? How do you know they're not holding you back to where they are so that you don't succeed? How do you know? Let's keep on going. I thought the same of Big Lots. Dividend stocks are a good investment. Yes, they are. They are closing stores. Yes, Dollar General is, because they're not. All right. Hellraiser, you're going to find a lot of companies are closing stores. And the reason being, think of it this way. If you are a store owner, you own a store, you put your blood, sweat, tears, and money and effort, everything you have, into a store. Okay? Let's say you're the owner of the store. And then you have, let's call them hoodlums, because there's no other better way of saying it. A bunch of hoodlums come in, rob you, take off, and the police don't do anything. Even if you catch them on camera, red-handed, they still won't do anything. So yeah, a bunch of stores are closing until the administration changes, until the changing of the guard. I don't know if you ever heard that story before, until the changing of the guard. And once you have a guard in there and saying, hey, if you do this, something bad, you're going to have repercussions. Because in every action, there's an equal and opposite reaction. You don't prosecute, well, this is the reaction that you're getting. The shitstorm that we're currently in. I think it's kind of cool because I've witnessed a lot of history, okay? I witnessed Woodstock. I didn't go, I was too little, but I actually saw it on TV. I witnessed what they did in Vietnam. I witnessed all the crap from my moment of remembering, which is in the late 60s. So I remember when the Mustangs came out, they were cool. Then I remember the moon landing. I remember all the Apollo 13. I remember all that stuff from all those years ago. This is an interesting time we're living in now. Yeah, a lot of stores are closing up. Dollar General's not going out of business. They've been around for a while. So you get rid of the stores in troubled areas because there's no repercussions for bad actions, for lack of better ways. Okay? And you concentrate on the sections that are profitable, where people have morals, where people have values, where people don't steal because it's not right. Thou shalt not steal. It's right in one of the 10 Commandments. So we know why people do it. Don't know. Can we look at Nvidia? No. Look at SIFI? No. And look at their revenue. Okay, see, I understand that, when you people ask me to look at something, you think that it's a good thing. Okay, that's what you think. There's nothing wrong with that. I'm just telling you it doesn't fit into my trading strategy. What I'm looking is for a simple, safe, predictable, and consistent 1% per week. NVDY, no, it just doesn't fit. SIFY, never heard of it. If I've never heard of it, it's usually going to be a no. So, SIFY, yeah. Monthly, no. NVDY, it's an ETF, no. I didn't even have to look. I knew right off the hand. Okay. Monthlies just don't pay out the same amount of money. So why would I even waste my time looking at something? What about Walmart? I love Walmart. Now Walmart's a good company, huge, and they have the Walmart mafia. You get caught by Walmart, and it's not that pretty. Okay. WMT. Now, I'm not sure if you're looking at WMT as a stock suggestion or WMT as a store that's having issues. I never heard of Walmart having any issues or the theft being a problem with Walmart. But anyway, let's take a look at it. You ready? Walmart is at the high. Okay? I don't buy at the high of the year. Now this, look at, you got a gap up here, a gap down here, a gap up here, gap up here, a gap up here. We're at a high of the year. It's going to be a no until she pulls back. Now, we can put Walmart down for 3 weeks to see what it's doing 3 weeks from now. But at this moment in time, it's going to be no, WMT. Now, I like Walmart. Don't get me wrong. It has nice premiums. Look at it. 76.61 to 77. They don't actually look that good. Not this week anyway. William, send me the link for the morning trading group. All right, William, now don't take this the wrong way, okay? But you need to send me a DM to remind me, because I'm not going. Okay, wait a second. Here you go. No. Dude, you need to send me a DM because I'm not going to remember. Where are we? All right. Sold my Bank of America 920 puts 39.50. Central Texas Cartel, how are you? Minty Fresh 3M. I like 3M. Whoops. Yeah, 3M's going to be a no this week. Too close to the high. But look what she did. Here's the high of the year. She's pulling back. This is what you call profit taking, because your previous bottom is here at 122. She jumped up to 113, so 134, which is a $12 increase. $12 on a $120 stock, that's a 10% increase. Okay, 10% increase. Now she's dropping. How far is she going to drop? Well, time will tell. So I'm going to take a look at 3M in 2 weeks, because I think 1 week, 2 weeks before she gets down to this 120 to 120 area. So 2 weeks for 3M. 1, 2, 3, M. Waste Management. All right, ATT Porlux. Waste Management is actually on the list for 2 weeks from today, because it's just not looking good. Microsoft. Waste Management. Yep. Okay. Here's Waste Management. Waste Management is on the list for next week, because look where we are. 30 days ago was the bottom. Okay. Monday was the 30. Tuesday was the 30-day top. Look where we are now. This thing is still coming down. So sometimes next week, we're going to find a new bottom before she turns around. Turns around, she's going to go back up again. I already have Waste Management written down for next week. Microsoft, MSFT. Now, Microsoft's excellent. Hold on a second. An excellent example of consistent dividend increases. If you look at historical payments on dividends, Microsoft is awesome. Consistently, every single year, higher and higher and higher and higher, Microsoft. All right, so Microsoft's at 400. The 400, holy cow, do you see that? The 400, okay, currently the price, $400.07. The 400 is going for $6.80. That's 1.5%. And we all know who Microsoft is. It's not like, oh, what's Microsoft? I remember when Microsoft came up, everyone's scratching their head. Who? Yeah. Anyway, a year ago, Microsoft is sitting at 333. It bottomed out in late September at 306. Okay, here's your top. That looks like a triple top at 467. That was in the beginning of July. From there, she drops down to the 8th of August. Okay, and that was 385. She shoots up, pulls back. She does exactly what every other stock does. She goes up, she comes down. She goes up, she goes down. Well, she's in the middle of going down at the moment, so we'll put Microsoft up for next week to see if and when and where the bottom's going to be. MSFT for next week. Let's keep on going. Do you invest in any international stocks? Okay, I don't categorize my stocks in any other way other than when they pay their dividend. I honestly really don't care. And I don't know how to bring that across to people. There's certain things I do care about. One, are they consistently profitable? Two, do they have weekly options? Great. Three, when are they paying their dividend? Because the dividend tells me when the stock usually goes up. Because there's only two reasons for a stock to move. That is an unknown reason, which we have no control over, and a known reason, which we do have control over. Now, an unknown reason, do you remember when British Petroleum, on the top of my head, British Petroleum sprung a leak in the Gulf of Mexico? Nobody knew that was going to happen. That's an unknown event. Hurricanes, tornadoes, Mother Nature, okay? Big old lawsuit, just slap right there in the middle of the, what do you call it? Media, social media, not social media, right in the nightly news. I remember 3M had an issue this year. They actually cut their dividends, and they had to do what do you call it, a spin-off to save some legal battle. Yeah, some crap. And Apple had a huge lawsuit. They had to pay billions somewhere in Europe this year. That affected the stock also. Those are unknown reasons. We cannot plan for those. But what we can plan for, earnings, dividends, seasonality, things we know that are coming, that are written down. Dividends and earnings, okay, these are the dividends right here. Those are the earnings. See, the little blue and purple things, those are earnings. The little green things, those are the dividends. Now, I like dividends because dividends have a tendency to have the stock go up just before the dividend. Earnings, they're a little wishy-washy. I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. No rhyme or reason. Sometimes they work, sometimes they don't. Sometimes a bad earnings can have an exaggerated effect on the stock. Okay, so let's say they get a bad report. They miss it by, let's say, 0.1% or 1/10. Okay, like not even a half a penny. Okay, they missed it by a half a penny and the stock will still drop. That's freaking ridiculous. So no, I do not categorize my stock buying by industries, countries of origin. If they have a dividend, they have 20 years of dividends, okay, and they're consistently increasing, I put them to my calendar. I take a look at their profitability. I take a look at their book value. There's a few other fundamentals I take a look at before I decide whether or not to keep a stock in my calendar. I need to join. Laurie B, how are you today? All right, Drozik, that's cute. I remember that infomercial well. Do you remember that one? But yeah, I remember that. That was in 1985. That was the first time I've ever seen an infomercial. Please, Angel, how are you doing? So, That's the first time I ever saw an infomercial, which was kind of cool. Because it not only, it made me think, wait a minute, if this guy is saying this, but I've been listening to this all my life. So what the guy's saying on the infomercial is totally against everything. Random chaos. Mister, you acting kind of like a... All right, whatever. Yeah, so that's the first time I ever thought outside the box. Because, you know, growing up, we're taught, all right, we're indoctrinated. I love that word. We're indoctrinated, you know. This is what you need to know. This is what you need to do. This is what you need to do. And it's like, isn't this my life? Why are people telling me what I need to do? Sorry. So the infomercial 1985 was the first time I thought, wait a second. If these people were lying to me, well, maybe these people are lying to me. It was very enlightening and very disturbing at the same time. You, you think Verizon is a good dividend stock? Oh, yes, it is. How do you, do you use a brokerage firm to handle all your other money, or do you, oh, Laurie. Laurie, that's a good question. Hold on a second. All right, here's the question from Laurie. Do you use a brokerage firm to handle all your other money, or do you do it yourself? Okay, Laurie, you're under the impression I have a shitload of money. No, I don't. I have enough to be comfortable, okay? Now, no, I don't trust anyone with my money, because one thing you're going to know, and we all know this, okay? And we all know that we're being lied to, okay? So, when you take your money and you bring it to a money manager, a brokerage firm, or a money conditioned, ooh, that is right, conditioned. Okay? Now, what I was told growing up, work 40 hours a week for 40 years of your life. Okay? You take a little bit of your money every week and you put it aside and you give it to this gentleman. This gentleman will give you 2% a year, 3% a year, or something, some bullshit like that. Okay, great. I thought that's the way you do things. But no, this one infomercial had me start questioning. And then I heard another one, then I heard another one. Then I started seeking them out, because here are people on TV paying lots of money to be on TV to send me a message to make me question everything I've learned. So then I see this book called Wall Street Money Machine by Wade Cook. I read that and I'm thinking, if that's true, then this should happen. So he taught me about channeling. You know, when oh, wait a second, see if I can find one. Oh, yes, hold on a second. I know a good one. Here we go. All right. Yeah, here we go. Macy's. Take a look at this. Now, Wade Cook opened my eyes to a few different things. One, it's called channeling. Okay? Stock goes down, up, down, up, down, up, down, up, down, up. But see, it's staying within these lines right here. See those lines? So if I buy here, sell here, 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 buy here, sell there. Do you see that? Channeling. It went nice and smooth right through there. Now, a lot of stocks do that. Why don't you like NVIDIA? Kim, why I don't like NVIDIA? Number one, NVIDIA is $120. A couple of months ago, it was $1,200. Now, before they did the 10-to-1 split at $1,200, the dividend was 2 cents a quarter. That's 8 cents a year. You're paying $1,200 for a stock that's giving out 8 cents a year. No, now it's down to $120 a share, and the dividend has dropped to 1 cent a share. Also, at $120, if that company was ordered to liquidate and pay off all its investors, you would get a whopping $2 for your shares. Why? Because the book value on NVIDIA is $2. All right? So you sell off everything NVIDIA owns, okay? The pencils, the papers, the paper clips, the chairs, the lunch tables, the old computers, the trash, the buildings, everything. You sell off everything NVIDIA owns. It's called a balance sheet. What you own, what you owe. Comes together, $2 a share. You're paying $120 for a $2 share. Okay, so here you go. I could buy this for $1, all right? But I'm going to sell it to you for $120. Explain that to me. If it's only worth $2 a share, why are you paying $120 for it? And you're paying $120 for it, and you're getting a 1-cent dividend. That's 4 cents a year. 4 cents a year on a $120 stock. That's why I don't like NVIDIA. Okay, there's 9,598 companies available to invest in any day of the week. Okay, now that's 9,600 companies. NVIDIA, no. Okay, I only like companies that consistently increase their dividends for 20 consecutive years because I know they're profitable. I'm not looking. See this stock? Do you see it go up? No, it's going sideways. It went up, down, up, down, up, down, up, down, up, down, up, down, up, down. I traded this thing since January, almost every single week. As a matter of fact, let's quickly jump over and take a look, because all my trades are posted. Where are we? Right here. All my trades are posted right here for the whole year. Okay, so it goes all the way back to January 2nd. Right here. Week 1, first quarter. You come over here, we click on right there, and take a look right over in this section right here. Okay? 1/2/24, 10:01 a.m. Macy's, General Motors, Ford, CVS. Week number 2, Macy's, Ford, General Motors, Clorox, Lowe's, Ford. Week number 3, Macy's. Week number 4, Macy's. Week number 5, Macy's. Week number 6, Macy's. Week number 7, Macy's. Week number 8, Macy's. So on and so forth. If you have a stock that continuously profitable every single week and is giving me anywhere between 1 and 4% every single week, well, why the hell not do it? Okay, it's like I look at it twice a day. First in the morning and then at night. I know what it's doing. You could call it intimate with the company. Okay, I have seen all of this. Okay, I've been trading it since the beginning of January. I'd buy it, I'd sell it. I'd buy it, I'd sell it. And I make that 1% every single week. All right, you look like Bill Ackman. Okay, I don't know if that's a yes or no. Do we hate Nancy Pelosi? I do. Do you like Warren Buffett? He's cool. She hates you too. Yes, she does. AT&T, love AT&T. However, I don't think AT&T is that good of a deal. Because you'll find that the really old companies, I mean the ones that have really been around, yeah, the dividends and the premiums aren't that great. $20.93. We look at the 21s. The 21s go for 23 cents. Nice. That's over 1%. I like over 1%. However, AT&T is at the high of the year. Okay? Here's a place where it's never been this year. It has never been at 21. So why do I actually think I am actually that special, that wonderful, that it is going to go to 21 once I buy it? Nope, I don't do that at all. I wait for it to pull back. Look here. It went up, it pulled back, up, pulled back, up, pulled back, up, pulled back. Okay? It's going to pull back eventually. So I'm going to put AT&T, not for this week, because, it's not going to get down to here next week, 3 weeks. I think about 3 weeks, in my humble opinion. I could be wrong. So 3 weeks, we'll take a look at AT&T again. AT&T in 3 weeks. All right. Sorry, dude. Verizon's probably going to be the same thing. VZ. Okay. Again, way too close to the high. She's pulling back. She's going to keep going. But this one, it'll probably hit it in 2 weeks. So we'll put Verizon for 2 weeks. We'll look at it again. That's 1 week, 2 weeks. Verizon. VZ. Double jolly good. Let's keep on going. All right. Flow. What the heck is flow? Uh-oh. My mistake. Last month's div. Kim, how are ya? I missed all these questions. FLO. I have no idea what that is. FLO. Flow. Flowers food. Yeah, no, that's a monthly, dude. Can you guys please think about this for a second? I'm going to get a sign right up here. It's going to say dividend stocks only with 20 years of increased dividends. So FLO, no. I want to learn about dividends and the stock markets. Kyler, is that right? Kyler? Well, thank you. William, do you need to send me a DM because I'm not gonna? Oh, yeah, that's right. I just said that. Sorry, William. Yeah. I'm not gonna remember. That sounds so rude because they don't give you enough letters, and I actually said it here online. I said, William, you need to send me a DM because I'm not gonna remember to. Did cut it off, and I sound like a dick. I do. All right, MU at double bottom. Hellraiser, MU, huh? Ooh, yes. Check that out, a double bottom. Nice going. So let's take a look at Micron. Here's the high, here's the low, here's where it was, here's where it is at 86.25. The 86 is going 270. Nice. That's way over 1. That's close to 2%, maybe even higher. Okay, so Paul Ferreira, we already looked at AT&T. We said AT&T is a great opportunity 3 weeks from today. Sorry. All right. Micron. Okay, well, let's take a look. A year ago, we were at $70.42. You see that? $70.42. And then she doubled in price. 100% increase in 9 months. There you go, 100% increase in 9 months. You think it's going to do that again? We just don't know. That's not a game I want to play. There's 9,600 different companies. I can't afford to play this kind of game with stocks. I can't. I need a safe, predictable, consistent 1% a week. That's what I need in order to live comfortably. All right. Topped out at 157. She dropped down to 84, back up to 112, back to 86, the last 30 days. Here's Johnny. Here we go. Take a look. 30 days ago. See that? 30 days ago, she shoots up. 30-day bottom, 30-day high, new 30-day bottom, 86.38. The 87s go for 220, which is over 2% if you like this company. However, as much as I like this idea, I want a double, I want 2 days to the upside because I don't know if that's the bottom yet. And that's probably why that premium is so high, because the market maker doesn't know if it's the bottom yet either. Because once it hits, see this one right here? This was the 30-day bottom before. And you have 2 days to the upside. Then you have all of that. Well, here's the bottom right here, 2 days to the upside, but then the very next day she drops. That's why I like to wait 2 days to the upside and then see what happens on the third day. The third day she gapped down. Well, I didn't buy it. Well, now here's a bottom. I'm going to keep watching for 2 more days and see if they're going to be higher. So I'm going to put MU down for next week. MU down for next week. All right, SMH. Aaron, what the heck is SMH? Yep, it's okay. All right, SMH. Venic Semiconductor ETF, 215. All right, the 215s are going for 530. That's well over 2%. So let's take a look at how good they pay their dividends. All right. What is that? SMH. SMH. Here we go. $215. They've paid one dividend. Aaron, dude, if I was there, I'd slap you silly. Seriously, you're going to invest your money into a company that has one dividend? One. Not 1 year, not 1 decade, not 1 century. No, just one. And that's how you make up your mind? With just one? Your mama needs to spank you, boy. Sorry about that. It just blurted out. Okay, AT&T, we're going to look at that a little bit later. What did you do before you retired? Oh, I did a lot of things. I owned a manufacturing company. Believe it or not, I used to be a CEO. Used to be. Many years ago. I worked in the restaurant industry. I worked in construction. I was a handyman. I took 10 years off, did absolutely nothing, because when my wife left me, I sold a manufacturing company, and I took all that money and I blew it. Traveled around the world, went and saw a lot of shit. What's up with Tesla? Anthony, I really don't know. Tesla does not do dividends at all, so Tesla is not on my list. Please don't ask me to take a look. Head laser. It's not even inflation. It's competition with Walmart. Okay. A lawsuit or recall. Yep, Rudy, you're absolutely right. Black Swan events. You. I got my ass kicked with a Black Swan event last year. I lost 15 grand. I think it was 12. I think it was 12,000 overnight. Okay, stock jumped up 16 points overnight. Black Swan. Boom. I got caught at the tail end of that one. Someone was happy, and it wasn't me. Somebody got my 12. All right, anyway. Agreed, Walmart has much better pricing power. They're eating the dollar stores. Yep. Minty Fresh, thank you. I agree with you. Never trust anyone with your money but yourself. Yep, nobody has more interest in your money than you and your ex-wife. I shouldn't say that. My ex-wife is really not that bad nowadays. All right, can you explain your strategy in detail? No. Okay, Prince, you're new here. All right. Now, no disrespect. You may be a prince, you may not be. You may be Bubba, who's on death row in jail. I don't know. Anyway, it's a simple trading strategy. It was created for a 9-year-old little girl back in 2008. First off, my daughter, when she was 9, she wanted to learn how to trade. It had to be simple. It had to be safe. It had to be predictable, consistent, and no way that she could lose. That's the 5 criteria I needed to come up with for a trading strategy for a 9-year-old little girl. So here you go, the 5 rules. Rule number 1, never buy something you do not understand. If you don't understand it, if you can't give a 15-second elevator pitch as to why you bought it and what's so good and great about it, then don't buy it. We're talking about your money. You are trading your time, which is something you can ever. Money comes and goes. It does. I've made a lot. I've lost a lot. You don't know me, so I'm not going to say trust me, because it's one of those things. You're going to learn one way or the other. Money comes and goes. I can't remember ever hearing somebody on their deathbed and say, oh, I wish I worked some more. No, I've never heard that. They always have regrets for not spending more time with their family, not doing this, not doing that, not going traveling, seeing the world, not making up with their brothers or their sisters or their family relatives. Never heard somebody saying, oh, I wish I worked some more. No. Money comes and goes. Okay? So the strategy had to be simple, safe, predictable, consistent, in no way that my 9-year-old daughter could lose. Never buy something you don't understand. Never sell at a loss. Make sure the company has more than 20 years of increased dividends, or if you want, has consistently been profitable. If you're one of those people that likes to read annual reports and quarterly reports and all that crap, more power to you. Me, I go right to the dividends, because the dividend is a portion of the profits that are given to the investors. Okay, we're kind of low on the list. You know, they want to pay the electric bill first. They want to pay their employees next. They want to pay their suppliers next. They want to keep everything going smoothly. Who gets last on the list? The investors. We get a portion of the profit that's left over. If that increases every single year, well, logic, reason, and common sense say, well, if they continually increasing their dividends, they must be profitable consistently. 20 years, I like increased dividends. Rule number 4, make sure there's weekly options. Why weekly options? Well, it's a greedy thing. I want paycheck every week. That's it. That's strictly greed. I want a paycheck every week. I grew up the 60s, 70s, and 80s. I went to work at 8 o'clock in the morning. On Monday morning, Friday afternoon, I expected to get paid. That's how I grew up. That was my mentality. Okay? Same thing. I jump in the stock market first thing Monday morning. Okay? Monday, Tuesday, Wednesday, Thursday, I take a look at all my positions. Friday afternoon, I'm sitting there at 3 o'clock, seeing where my positions are, what's the best strategy to take me into next week, how much am I making a profit, am I buying something back? I can't answer the questions of Friday afternoon on a Monday or Tuesday. It has to be Friday afternoon because we don't know what's going to happen to the week. Now, by looking at the charts, we have an idea because when she goes up to a certain point, there's going to be profit taking. It's normal. It's human nature. If we see a stock hitting at 280 and then a year ago it was at 140, well, that thing just doubled in price. Of course people are going to take their profits. It doesn't go up forever. Nothing has ever gone up forever. Everything turns and goes back down. The Dutch East India Shipping Company ran for 198 years. It was basically untouchable until it wasn't. Okay? Now, when we saw Apple just kept going higher and higher and higher. And then it didn't. It started coming down. Same thing with gold back in the 80s. It went higher and higher and higher, and then it didn't. Same thing with Bitcoin. It started out with $2 or $3. Now it went up to 76, and then it didn't. Everything stops at some point. The Earth's going to stop rotating at some point. Don't know when it's going to be. Let's get back to something we're a little bit more on our level with. Secretariat, Dave Del Dotto, I remember him. Carlton Sheets, I remember him. As a matter of fact, I've seen Carlton Sheets recently do a a commercial. Remember their real estate infomercials? Yes, I do. No money down. I actually bought one, and I actually bought a property with no money down. I even bought a house on a credit card once. I thought it was the craziest thing. It's like, this is your bill? Oh yeah, here. Put it on my charge card. That was funny. Self-directed brokerage, right? Absolutely. All right, let's keep on going. Yep, I was a Chippendale dancer. Thank you for that. Oh, we did 90 minutes already? Holy shit, it's 11 o'clock, and we haven't done hardly anything. You guys keep bombarding me with questions. Not with that AD who's not. That's funny. It is. Yes, I do. I have ADD. It's a horrible thing. But, you know, you learn to live with it. Most of the companies trading over book value. No, not necessarily true. Ford at this moment is trading below book value. General Motors trading below book value. I think AIG is trading below book value. Those are the companies. I call those my fallback companies. If everything else is looking like crap, I'll jump on Ford because Ford is trading below book value. So is General Motors. I like those. So let's keep on going. We got a couple more questions to go. Bought by right Dell this morning. Cool. 2 contracts, September 13, 107. Cool. All right, Calibri, way to go. Susan. Was that Suan? People are in NVIDIA for capital gains, not for dividends. Suan, you're absolutely 100% correct. And that's exactly why I'm not in NVIDIA. Okay, I have no interest in playing that game. Now, if I was in my 20s or 30s, yeah, maybe I would do it. No, thank you, not nowadays. I like Ford. It's $1 off its bottom. I don't think so. Ford's bottom, I believe, was like $2.50, and that was like 10, 15 years ago. You're in a rare form. You must be getting tired. These last jokes are killers. Well, here's the thing. Usually I stay away from caffeine and soda, But I was at my son's house today, and he had this monster drink in the refrigerator. No one was around. It was a hot day. It was icy cold. I said, hell, I'm drinking this sucker. Now I'm wired to the gills. And this was like noon. So that was what? Almost 11 hours ago. I had, yeah. Me and caffeine don't work out very well together. I'll be wired all night. I probably won't get to bed till like 3 o'clock because of that. Anyway. Minty Fresh, hello, how you doing? All right. Please name that book again. Oh, that was Wade Cook's Wall Street Money Machine. Now, it was ages ago, but all the strategy, once you read these strategies, you think to yourself, holy shit, is that right? Because if a covered call can get you 1% per week safely, that's 50% per year. Have you ever heard any banker, investment broker, or anyone tell you you can double your money every 2 years? No, they don't. People were excited. It's like, oh, what do you mean you're getting 10% a year? Yeah, no, I used to. Seriously, I used to, but not anymore. Now that I've peeked behind the curtain, bro, you didn't get paid this week. I didn't get paid this week? I thought I did. What goes up must come down. G-Money, what's happening? Okay, Hellraiser. That's the unpredictable part where you get out. Well, not for me, Hellraiser. Say the unpredictable part where you get out. No. See, if I'm buying it at $2.15, I'm selling somebody the rights to buy it from me for the exact same price I paid for it, so I know where my exit is. So if I buy it at $2.15, I sell it at $2.15, I walk away with this. I really don't care what happens after that, because see, I'm not going to buy this one because it's the wrong place. But let's take a quick look. Okay? Now, here's our 30-day bottom right here. She goes up, that's the 30-day top. She comes back down, now it's looking for a new bottom. Once it finds the new bottom, it will turn around and go back up again, because that's all stocks do. They go up and they go down. That's it. So we're looking at this one. If I bought it first thing Monday, I'd sell it for exactly what I paid for it, $215.28. The $215s are going for $530. Just for the fun of it, let's pull up the calculator. Okay, now, if the premium on the $215 is going to be $5.30, $5.30, and the purchase price for the shares is $215.28, divide that by 215.28. My rate of return for the week on this particular stock is 2.46%. 2.46%. If I continue to get that every single week, that's over 100% a year. That's freaking crazy. Aaron, sorry, dude, I don't do cryptocurrency. But going went from 2 cents to 71,000 and now dropped to 55. Aaron, I get it. However, that is a young man's game, okay? Once you retire, when it comes to retire, you have 3 opportunities, 3 options. That's it, okay? When it comes time for retiring, you either, 1, age out. What does that mean? Well, you get so damn old, you just can't work anymore. And they say, you're just too old, go home. That's aging out. Okay, everybody gets forced to retire at a certain age. Okay, we all know that. Number 2, you can walk out. Walkouts usually have enough money set aside to last them the rest of their lives. Okay, that's it. That's what I did. I had enough money that my 1% per week was satisfying all my monthly obligations. Why? I don't need to work anymore. I've been working since 1973. That's a long freaking time. I think I deserve to retire. I'm still able to work if I want to. Okay? I'm not feeble. I can climb a ladder. I can still do shit. Every once in a while I do, but I do it because I enjoy doing it, not because I have to. Totally different thing. Huge. 3 ways to retire. Way number 3 is you can be toe tagged out. We all know what that means. It means you die on the job. And I know a lot of people that die on the job or died on the job. Yeah, I got to go to work. I had a friend of mine's, okay, kid I used to hang out with in high school, Billy, okay, peas and pods. Like we joined the service together. We did a lot of things together. His brother walked out of the house, going to his car. From the time he walked out of the house, before he got to the car, he dropped dead. He was in his early 40s. Dropped dead in his early 40s. We don't know when our time's up. All right, BTC. No, I don't do Bitcoin. Sorry. Salco, dude, how you doing? Junksy's 81, October. What does that mean? I look very humble. Well, thank you, I think. All right, Prince. So if EX dividend date is 9/19/24, when will you enter and what option will you sell? Okay, so Prince, I'm going to respect your question. It's a cool question. I have no idea what stock you're talking about. So let's say hypothetically, we look at something's on the 19th. Okay, so there's only one company that has AX dividend on the 19th, and that's ASO. That's paying an 11-cent dividend. If I really like that, I would have bought it on Monday, which would have been the third, Tuesday, which would have been the third. That's 2 weeks before on a Tuesday, because Monday was a holiday. All right? I'd look for my 1%. If I got it, great. What strike would I sell? Well, let's take a look. ASO, I've never even heard of it, so ASO, Academy Sports. Okay. Now, if I was going to do this, not saying that I'm going to, because I never really heard of it, but the current price is at 53.58. Okay? So at 53.58, the closest strike price, okay, closest strike price is going to be the 54. And the 54 is currently selling for $2.50. That is just shy of 5%. That's telling me this thing probably doesn't have any dividends. So let's go find out. ASO into Yahoo Finance. And it does have dividends. Holy shit. Yeah, but it only has 2 years of dividends. But they're increasing. Take a look at that. 8, 9, 11. But it's only 2.5 years. Okay, if you wanted to gamble, okay, 2.5 years of dividends, they've increased, right? And they're paying close to 5% for next week, if you like this company. Now, it is tempting, because I like the idea of a 5% rate of return. Well, let's take a look at the chart. All right, here's our high, here's our low, here's where it was, here's where it's going. Right, a year ago, we're at 52. Bottomed out in October at 42.82. The top was 75.88, and that was the beginning of March. Last 30 days. All right, this is going to be a no, because look at the last 30 days. 30 days ago was the bottom. Was at 47.50. Shoots up to 46.50. That's a $9 increase. A $9 increase on a $40 stock is a little bit under 20%. A little bit under. Okay, here's our high. She drops down, back up, back down, back up, back down. Well, there's no real rhyme or reason to where she is at the moment, because hypothetically speaking, she should come down, but she's kind of going to side at the moment. So it's really uncertain. So let's take a look at seasonality. Now, from some of you that are new here that don't know what seasonality is, let me briefly explain it to you. To the far left is January 1st. The far right, December 31st. That's one whole year. The blue lines represents the movement of the stock this current year. The red line represents the movement on the stock for a 10-year period, average movement. I want to take a close look right here at this section here, because this blue dot is actually today. So give me an idea, how does a stock normally react at this time of year? Well, if we're looking at it, it should be coming down. Kind of tells me this is not a good time for buying this stock. So I click on that blue dot, drag it to the right. When it lights up, that's about 3 weeks. Okay, way over here, this is where we are right now. Let's get the crosshairs there. Right there. Okay, this is where we are right at this moment in time. 9/6, that's today. 9/13 is next Friday. Okay, so she's going to go up a little bit, then she's going to pull back, and then she's going to keep dropping before she goes up and then pulls back down again. So it's basically going to be in a downtrend. You might be able to get some kind of a profit between now and next Friday before she starts to really drop. That's historical performance. It's not guaranteed. That's just what has it done the last 10 years at this time frame. Okay? I like the seasonality chart, and I remember when they first came out with it, it was pretty cool. I had an awesome seasonality chart that I had made for me from the guy in Russia, this programmer. Cool software. But when Yahoo changed the data stream, yeah, it doesn't work anymore. It'd be kind of nice if someone could fix it. But so far, the last 10 years, I can't find anyone that can fix it. All right, 52-week low is 949. Okay. Bro, right, saw that one. That's the unpredictable part. Where do you get out? Okay, yep. Any example? Prince, we already gave a couple examples. You need to be a little bit more specific in your requests. Okay, any example, you did a bunch. So buy one contract. Okay, Hellraiser, I don't buy contracts. I sell them. There's a huge difference between option buyers and option sellers. I'm an option seller. Savid. Savvy sells. Is that right? Savid. Savid sells 17. Well, Peter sells 16. And Joe, I heard he sells 15s. Anyway, sorry. Okay, Hellraiser, you need to give me a better response than that. Hey, what up? Someone, how are you? Okay, thoughts on Kohl's. Ooh, I like Kohl's. I'm debating if I should sell Verizon. Abraham, how are you today? Okay, Abraham, I can't really tell you anything about Verizon and your certain situation, but I do know a few things. Number one, it's not a profit until you take it. Number two, nobody ever went broke taking profits. Okay, number three, I think Verizon is on our list for 2 weeks from this week. So it's at a high at the moment, coming to the downside. Yeah, all right, let's put in Verizon just for a second. VZ. Okay. We'll talk about channeling. Check this out. Check out that channeling with Verizon. Holy shit, look. Sell here, buy here. Sell, buy. Sell, buy. Sell, ooh, yeah. I see that it went up, but I'm talking about the channel. See, the channel is here. Yeah, this is when it went out of the channel. Okay, sell, buy. Sell, buy. Sell, buy. Sell. I'm talking about this channel right there. See it? That's for Verizon. Okay, so right now, Verizon is right here at 41. Okay? Up, down, up, down, up, down, up, down, up, down. That's all it do. That's all it do. No, it's all it does. All right. Thoughts on Kohl's? On Kohl's. Let's Kohl's. KSS. Kohl's. Tra-la-la. Here we go. High, low. Where was it? Where is it? What direction is it going? 1991. Oh, I remember 1991. Oh, sorry. All right. 1991 is the current stock price. The 20s are going for 34 cents. That is over 1.5%. So there's a couple of questions you need to ask yourself. Do you like Kohl's? Do you like Kohl's at this price right here? All right. Kohl's at this moment in time, well, we have our bottom, 1782. We got our top at 2963. We're currently at 1991. Last 30 days looks something. Let's get it. Where is it? Right there. Looks something like this. That looks kind of confusing, but take a closer look. Look, she goes up, down, up, down, up, down, up, down. Coles is coming down at this moment in time. I mean, you can get a third grader to point that out. Up, down, up, down, up, down, blah, 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 blah. The question is, do you like it at this price, $19.91? Now, I already own some Coles, okay, so I really can't say one way or the other. Ooh, more questions. ASO does a lot of rifles and archery for hunting, so November and December, okay, could be on the upside. Cool beans. Should go up. Yep. That's a perfect, okay, Redneck, that's a perfect example of a company that should hypothetically be manipulated by seasonality. ASO. I want to take a look at the seasonality for ASO. Well, would you look at that? Okay, so from now until the fourth quarter, holy shit. Look at that, Redneck, from now. All right. Okay, here we are right here. This is today. Okay, the end of the month, which would be 9/30, right there. Look at that. From here to the end of the month drops. From the end of the month, what happens at the end of the month? That's the end of the third quarter, beginning of the fourth quarter. So from the fourth quarter, look at that. Nice. Redneck, we got to look at this one at the beginning of the fourth quarter. So I'm going to write that down for the fourth quarter. That is 3 weeks away. All right. So what expiration date would you sell? It always depends on the numbers. Okay, Prince Multani. Okay, it depends on the numbers. What numbers am I looking at? What am I buying it for? What am I selling it for? What is the price that I'm getting paid for it? Okay, a lot of those things. What language is its attention? I have no idea what you mean, Neil. Rope Ankala. Is that right? Rope Ankala? 1 month, 3 months. Okay. Hellraiser, you want to take a look at Ford? I love Ford. One of my favorites. One of my favorites. Okay. High, low, where was it? Where is it? What direction it's going? It looks like it's dropping at the moment. Okay. Now I do know that Ford's book value is somewhere up in the $14 area. Okay, right now it's trading at 10, which is below book value. 10.56 is the current price. The 10.50s are going for 24 cents. That is over 2%. I like Ford at 2%. I have no problem whatsoever buying Ford at $10.58, especially when the book value is $14. All right? Now, Ford is one of those fickle companies. Every once in a while, the premium will not be that good. Okay? But at this moment, the premium does look good. So I'm putting Ford for next week. Ford for next week. Ford. Let's take a look at the numbers. Okay, here's our high. So she goes from the high of 15, drops all the way down to 950, shoots up to 1140. Now we're at 1058. Well, this thing's going to continue coming down until it stops, turns around, goes back up again, because that's all they do. Laughing my ass off, sell that wick. What the heck is wick? Felix, PHM. It's not ringing a bell. Pulte Group, 130. It's a little too high at the moment. Okay, what do I mean by that? Well, take a look. Here's the high, here's the low. Look at the flow. That's a nice flow from the low of the year in late October. So late October, she's around 70 bucks. Well, now she went up to 135. That's almost doubled in price. Now she's pulling back. Good luck. Ankala, Rope, is that Ruapi? Ruapi Ankala. I could be right. I don't know. Bro doesn't even use volume profile implied volatility. Why the hell would I? Okay, Enropi Ankala. You're missing a few things. Number one thing you're missing, okay? Simplicity. Okay, if I try to explain to a 9-year-old, you know, let me show you what I'm working with, or what I was, because she's not there anymore. She's not at that age anymore. Let's go to videos. Let's go to the oldest videos.
Four lists of stocks that you can choose from. Hi, I'm JC, and you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly, the company paying out dividends.
That was me in 2012. That was a long freaking time ago. How do you keep someone 9, 10, 11 years old? Namaste. Woohoo, namaste to you too. How do you keep someone entertained? All right? So this is me and my daughter doing videos in 2012 when we first started sharing the videos. It had to be simple. Okay? When I say it had to be simple, safe, predictable, consistent, and no way to lose, those were the 5 criteria I had to come up with. So volume profile, implied volatility, it's on the top of my tongue. It is. The price action. Well, you have price action, and then you have the Greeks, and that is the pricing of the Greeks. Pricing of the Greeks, something. Black-Scholes. I could go and try to explain the Black-Scholes pricing method to a 9-year-old. And you really think she's going to understand that? And then get on to implied volatility? Come on, seriously? When I say simple, adults have a tendency to make this more complicated than it needs to be. If a 9-year-old can average 5% per month, which is over 60% per year, which beats, I think it was 95% of all professional traders back in 2012. Okay, if she can do that, and I can do 1% a week, which is over 50% per year, you tell me what strategy you're using to consecutively get more than 50% every single year for almost 15 years. I'd like to hear about it. Okay, I don't even use implied volatility. No, why would I need it? If I'm picking a good company, one that is consistently profitable, and I'm following the chart for where it's moving, okay, predictability. I'm not buying anything that I would not want to hold on to. I have no problem whatsoever holding on to any one of the companies on my list. Well, let's take a look at some of them. JWN, Nordstrom's, Halliburton, Newmont, Bank of America, General Motors, Kimberly-Clark, Pepsi, Macy's, Coca-Cola, Devon Energy, Albemarle, T. Rowe Price, Waste Management, Best Buy, what is that one? MDT. Medtronics. If I bought, I'm sure you heard of every single one of these companies. I don't buy something I don't know anything about. And if it's going to give me a 1% every single week, okay? If it gives me 1% every single week, that's over 50% a year. And it takes me less than 10 or 15 minutes a day. That's a nice freaking rate of return, in my humble opinion. Now, I'm not giving anyone advice. I'm just sharing what I do. If you decide to do it, hey, that's up to you. Okay, I'm just sharing a simple, safe, predictable, and consistent trading strategy called covered calls. It's a simple strategy. And if you couple it along with dividend capturing, take the two together. Dividend capturing, covered calls, bring them together. I call it dividend capturing 2.0. Dividend capturing is an easy strategy. You buy the stock before the dividend date, you capture the dividend, great. But if you do it 2 weeks before and you incorporate covered calls, well, that gives you like a 1% every single week. And that's over 50% a year. And if that is not good enough for you, I can't help you out. Okay. 86 is here. I just saw him. Where did he go? PHM. All right. Don't. All right. PHM. Felix, we already looked at PHM. The candles, the thin line is the wick. Okay. I knew that. Okay. So what talking about is, okay, your candle, the upper wick is the high of the day, the lower wick is the low of the day. Okay, on a green day, the top horizontal line is the closing price. The bottom horizontal line is the opening price. The red day, kind of the same, but opposite. What do I mean by that? The top of the wick is the high of the day. The bottom of the wick is the low of the day. Okay? The top horizontal line is the opening of the day. The bottom horizontal line is the close of the day. Now the distance between the bottom wick and the top wick is the range of the day, how much the stock has moved throughout the day. Okay? I know all the shit. It's just trying to explain it to a 9-year-old right overhead, losing her interest, and then she doesn't do that. Go car. All right. Blah, 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 la, la. All right. Does she still invest now on her own? Sorry, Hellraiser, when she turned 13, Dad was the devil. At age 13, Dad's the devil. Yeah, so, it was great when she was Daddy's little girl at 9 until about 11 and a half and 12. And then I don't know anything. Is what it is. So you guys who have daughters, especially going to that tween age, you know exactly what I'm talking about. All right, Felix, CMA. What the heck is CMA? Or who the heck is CMA? CMA. Calm America. Okay, interesting. I don't remember ever investing in Calm America. So let's take a look at the dividend, CMA. I'm going to say no. The only reason why I'm going to say no, Felix, is they only have 4 years, not even full years. December 2020, the first dividend. Okay, for the first year, they didn't increase. That makes me a little fickle. And the second year, they only increased 3 cents. So they've been in business for 4 years, and they only increased twice. 86 theta, yeah. Search black backs. I have no idea what that means. This is basic analysis. Yeah, simple. Okay, you want to make it confusing? Go somewhere else. I want simple, safe, predictable. Says I want to start trading by this weekend. And is it okay to start with a small live account? Okay, Madnex, what I'm basically going to say is, number one, don't put any real money into it until you know what you're doing. Okay, stock market's been around for over 400 years. It ain't going anywhere. Okay, find yourself a paper trading account. Now, I've been trading for 20 years. I still paper trade because even I make mistakes after all these years. I think I made 3 doozies this year where I hit the wrong button. My computer had a glitch. And but I'm not making excuses. I made 3 mistakes this year. All right, Z and G, low float, no options. Okay, Ropi and Akala, why am I looking at it if it has no dividends? I mean, no options. ZGN. ZGN. I seriously hope. All right. ZGN, okay, is a definite no. Number one, they've only have 3 dividends. 3. That's it. Paid once a year. 1 in 2022, 1 in 2023, 1 in 2024. I have no idea how you pick anything. There are options, but very low float. ZGN. Hell no. Double, hell no. Couple of reasons. One, it only has 3 years of dividends. That's basically a no right there. Number two, it has monthly options. Well, that's a hell no because the rate of return is going to be absolutely horrible. See, right now it's at $9.91. Okay, so the $10 strike price is going between 0 and 65. Well, how the hell am I supposed to know what it is? Well, I'm not going to know until the market opens on Monday. And it has to be high enough. Laugh in my office. Cigna Hyper high quality company. I don't give a flying dead rat's carcass what it is. It doesn't have 20 years of increased dividends. I ain't putting my money into it. You put your money anywhere you want. I like companies that have consistent, predictable increases in their dividend. Basically, they're sharing their profits with me. That's what I'm looking for. Doesn't fit your criteria? Well, you don't really need to be here. You're basically wasting your time because I think it's a turd. Okay, here's your high, here's your low, here's where it was, here's where it is. It's a monthly. The 10 is going for 0 to 65. I can't figure out what the hell it's going to be. And then I got to figure out where's it going to be in the next 2 weeks. Well, at this moment in time, 30 days ago was your high. She drops down, she comes back up, drops down, she comes back up. Now she's dropped down. Here's our new bottom. The bottom at the moment. She might go down further on Monday. Don't know. I don't like it. It's a monthly, number one. And number two, it only has 3 years of dividends. That's going to be a big fat no. All right, let's keep going. Redneck, that strategy definitely has its good points, but time consuming, and I do this on Monday. Okay. I love Walgreens. Well, of course I do. Well, we are actually done with all the questions, so I can actually go through our charts. I mean, our charts. Redneck, that means it would be good to use it on Monday. I didn't say that, okay? Anyway, let's take a look at Dell. WBA will drop stores that lose money, then will be profitable. That kind of makes sense. All right, what are we looking at? We're looking at Dell, D-E-L-L. Dell, here's our high, here's our low, here's where it is. Okay, right now it's at 107. The 107s are going for 112, just barely making our 1%. Okay, well, let's look at the numbers. A year ago, we're at 67.84. We bottomed out at 63, topped out at 179. 63 to 179. That's almost a 300% increase. Okay, 300% increase. Holy shit, it's 11.33 and it's only 55. Out of here. Okay, so Dell, here's the high, here's your bottom. This is where we currently are. Now, I like Dell. I've seen it grow from nothing to something, back to nothing again. Here's our last 30 days. Now, we've been talking about this one for the past couple of weeks. Okay, here's our bottom. She shoots up. Here's our top. Now she's coming down. She's at 102. She's probably going to keep on coming down. And that will be our opportunity to jump in. As soon as she finds a new bottom, turns around, goes back up. So I'm going to put this one down for 2 weeks from today, because in 2 weeks she should make that move. Dell. Oops, Dell. Okay, all that being said, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for a safe, predictable, consistent 1% per week using nothing but pre-qualified dividend stocks. And those, my friends, are companies that have increased their dividends for more than 20 consecutive years. You guys have a great weekend, and I will see you again tomorrow night.